Rockin'.
Welcome to Better Credit, Better Home, your source for the latest local and national news that can impact you if you are in the market for real estate. Here are your hosts, the Kingwood mortgage guy, Mike Durr, who uses his 25 years as a mortgage professional to help people improve their credit, and Joe Salas, an accomplished home inspector, real estate agent, and trainer of new agents for Byrd Property International. Together, they will help you understand what you need to know to get the most out of your real estate investment. Let's get started.
Let's get started, Joe. How you doing today, brother?
Oh, I'm doing all right, Mike. Been doing a whole bunch of stuff with my son today. He was recognized as a national scholar through the College Board. He's a junior this year, so that's pretty good. And then he had a UIL competition today, so just got finished picking him up from that. So we've been running around, not doing too much real estate stuff, but it's why I do real estate, is to allow me to hang out with my son and be able to support him and when he's doing the things he's doing.
Well, that's quality stuff. There's no doubt about that. It's investing. You're investing yourself into that young man. So that's a very positive thing. So I don't know what to tell you. I have been scrambling around today, actually starting to see some activity again in the buying front. Not just a couple minutes ago, I got a great lead from my beautiful wife. That doesn't happen that often, so that's always a good thing.
That's awesome.
So, yeah, it's interesting too. It was crickets here for probably a couple weeks, and but I just this last week really things started picking up again. So, if that's any indication that things are back to some degree, I think that's a positive thing.
Well, we'll take it. Whatever it is, we'll take it for sure.
Now, I did have a pre-qualification that I did pre-qualify them. And then when I pre-qual them, I send them an estimate. I call it my detailed mortgage estimate of what the costs are going to be and what the rate's going to be and what the payment's going to be, all that kind of stuff, how much money they're going to bring to closing. And they kind of went, we better call you back in 6 months when we are a little more prepared. So there is no doubt there's a big difference between if you bought a house in the 2s, 3s, and 4s. When you're in the 6s and 7s, it's a different boat, man. It's a different ship to ride on. But I'm still convinced, and I've said this consistently, and I just haven't been, I guess, convinced that it's a bad thing to buy a house right now. I think it's a good thing. And my premise for saying that is, and I'm getting ahead of myself a little bit, but I still think that the interest rates could be higher. This could be a time when there's discounts out there, and obviously you want to get the best rates you can obviously get. But if rates turn out to be like they were and like they've been in the past, then buying right now could be a pretty smart move. And I haven't seen. I mean, I know that the price of homes is going. There's some people that are changing the prices on their homes downward. But I believe that's because they overpriced in the first place.
Yeah, that's one of the bigger challenges when I go in for a listing presentation. I know I've mentioned it before, but it's trying to level set expectations as far as pricing is concerned. Historically, sellers want to price their home a little bit more than what the market will bear, and it does them no good to do that. It does you no good to chase the market down at all.
Yeah, that's the truth. I mean, and especially in a time now when there are less people out there that are doing the information I put together today, I think bears out something that is it's starting to make a semblance of sense. I'm not going to say it makes all the sense in the world, but there's some obvious things that are happening, and I think we'll see that as we go through. So I will pledge not to get ahead of myself anymore, and get my beautiful branders going. And how about we just put this puppy up here? Let's see, did I do that? Yeah, no, I didn't do that. Go here. There we go. So obviously we like to start off with a little bit of humor, and this is a very little bit of humor, but that's kind of par for the course. We always like to talk about our zero down grants for heroes and first time home buyers and public servants. Um, One of the things I think of, you know what the CFPB is? Have you heard of that entity?
Mm-mm.
Well, that's
Maybe, but it doesn't sound familiar.
you'll recognize it when I tell you what the CFPB stands for. But they are the bane of a mortgage industry existence. I mean, they are not our friends, and so we see that some of the bank associations are suing the CFPB, and we'll talk a little bit about that. Credit score. This is one that it's probably a repeat of what we've done before, but I think it's worthy to let people know that there are things that you can do with your credit score that are positive, and it doesn't take a lot to do it. It may take a little bit of money. Foreclosure filings are up 100%. Now, that's a little play on that because the foreclosures are up, but prior to this, they have been pretty much eliminated by the government. The government did not allow foreclosures. They didn't allow lenders to foreclose on properties. So they are up a little bit. There's a tick up. And what I broke down is some of the cities where they're the highest and some of the states where they're the highest. Unfortunately, that's not something that we're being exposed to down here very much. Zillow came up and said that first-time homebuyers make up nearly half of the current buyers out there. Now, I don't know what the average is for first-time homebuyers besides, second-time buyers and third-time buyers and existing home buyers. But the fact that they are leading the group of people out there, that's where you're going to see the semblance of sense that we talked about. And then we're going to talk about interest rates and how, unfortunately, my headline says they're going to continue to climb, and that is exactly what we're seeing. So let's get started. You up for that?
I'm down, man. Let's do it.
All right. So I looked at some things that I thought were kind of funny, but this is the one that struck me. Being a dog guy, but I thought the look of this dog sitting on the edge of the fence, leaning over the side. I think it looked like he just wants to have a cup of coffee and chat. I mean, come on. All right, you didn't think it was funny.
No, you know what is flashing through my head right now? My dog barking at 3 o'clock in the morning, and I go to open our bedroom door, and she's out running around when she's supposed to be locked in her kennel. So she had gotten out of her kennel, and my wife found a present, I guess you would say, this morning when she woke up.
She left you a present. Oh,
yeah, that's a present.
Okay, well, being a dog lover, that was me. That was funny. All right, zero down home loans. This is one of those products that always has a home. There are always people that seem to have less money than a lot of people, and this is the absolute biggest reason that people don't buy houses. So this helps you eliminate that. And so let's just talk about how much money does it cost to buy a house these days. Joe, what do you see consistently when you go in and somebody's putting minimum down?
What's that again?
So how much money does it take to buy a house? It could be an
whoa. Well, it depends on whether or not they're hooking up with you for the zero down home loan. But as far as down payment, FHA minimum 3.5%. Sometimes on other type loans, you could go upwards of 20% needed. Like me, I just did a land loan. But as far as first-time home buyers and home buyers in general, usually I tell them to have available funds between about 5 to 7% of the purchase price is a good estimate where I'm telling them to be. Sometimes more.
So there's two main entities out there. There's the FHA, which is the primary one. That's where most of the loans get done. They have the broadest characteristics of all the products out there. And then there's a conventional, kind of like a Me Too type version of that product where they offer a 3% down. The qualifications are a little tighter on the conventional loans, but the conventional loan comes with some positive stuff. I've got one particular lender that right now, and these loans are based on the income level. So if you're 80% of the median income, you get one bonus. If you're 50% of the median income, you get a second bonus. And that is they actually contribute money towards your down payment. In one case, I think you can get at 80%, I think you can get $1,250 that just comes right off your down payment. And the other one, if you're at 50% median income, I'm not sure that's the right number, but I want to say you get $2,500 off of your down payment. So that is one of the better ones out there and it's still a down payment. You still need money. What the big mistake that a lot of people don't recognize is that they need to have money for closing costs. And particularly for the last probably 6 months to 9 months, when houses were on the market for 15 seconds, there wasn't a lot of negotiation for the seller paying closing costs. But now you get a house that's been on the market for a week and you might be able to negotiate closing costs right now. So that helps a lot of people. And on the zero down home loan, there's no down payment required. Pretty much everybody, first-time home buyers, school district employees, medical workers, policemen, firemen, military people, public servants, if you're can draw a breath, you can probably qualify for this, except if you're not a first-time home buyer. But if you're not a first-time home buyer and a school district employee, I mean, you could be a bus driver, you could be janitorial, you could be the administrator, you could be the warden of the school district or whatever they call them these days. Principals, yes, that's the word.
Or warden, I think sometimes it's probably the same.
I think I flashed back to my high school years where the inmates were all in. But anyway, you still get the benefits of this zero down loan, so it's still out there and it's a good product. So it's basically an FHA loan. You pay a little more for the rate, which is not very appealing right now, but it beats the heck out of not having a house. And so therein lies a question. So should I get a house even if rates are going up and even if houses seem to be declining in price? And I don't know if that's even true. That's what a lot of people are struggling with right now.
Yeah. At the end of the day, it's do what's right for you. But, contact a professional like Mike to see what you qualify for and give you an estimate on your monthly payments, and then contact a professional like me, either real estate sales or to help you decide the general or understand the general condition of the house that you're purchasing. That way you make an informed decision. But at the end of the day, it's up to the buyer at large. What I can say is stop paying your landlord for the privilege of living in their home. Start paying that same amount or less to build equity in your own home.
Yeah, I try to think of the alternatives to buying. And when you're renting, and some people like to live in nice places when they rent, but when you think about that, how much money you're spending on rent, and it's just you get no value out of that money at all. The purchase part of it looks pretty good. I mean, it looks really good to me. So anyway, I obviously I'm totally biased, but let's move on. So banks suing CFPB, this Consumer Financial Protection Bureau. So this is a government entity that's designed to protect consumers from those evil banks and credit unions and mortgage people. They are mandated by Congress maybe 7-8 years ago. They have totally overstepped their boundaries and have issued some amazing claims or fees and fines on mortgage people. But that's not to say that they're all wrong. I mean, there are some mortgage entities and bank entities that take advantage of people. Or in this particular case, this suit is about discriminating and not offering their services to everybody equally. Okay. So I've got that right here, this little article. I'm not going to read the whole article to you, but The lawsuit states that Congress did not give the CFPB authority to enforce anti-discrimination principles except in specific circumstances. Uh, it said that their new manual, because they write a manual about every year, updated manual is arbitrary and capricious. And so what they have done with these manuals is they've kind of increased their authority over banks and lending institutions to the point, and they really, there's no electability. These people are appointed, and it's a dangerous thing for them. Now, I am going to put their part. It says here, it says when a person is denied access to a bank account because of their religion or race, this is unambiguously unfair, says CFPB Director Rohit Chopra. We will be expanding our anti-discrimination efforts to combat discriminatory practices across the board in consumer finance. The CFPC declined to comment on the lawsuit, but these are the people that are suing them are Chase, Bank of America, Wells Fargo, Truist, and U.S. Bank. Those are pretty big boys that are suing the CFPB. So it'll be interesting to see how that comes up. Usually, it's part of our compliance when we have to dance around whatever the CFP is doing. CFP is responsible for the new TRID, and you know how much we love the new TRID compared to what the old HUD was. If you had any experience with that, the old HUD made a lot more sense and was a lot easier to read, but they made it better. They made it better. Banks say CFPB is stepping over their authority. New guidelines arbitrary and capricious. CFPB talking broad authority. They want it all, and then causing compliance costs. So if you agree or disagree, I encourage you to go to the chat or go to the Facebook or comment on the YouTube that this is on, or even Twitter. I think that this thing is on Twitter too. Joe?
Yeah, I just actually, while you were talking about it, I pulled it up over here so I can do a little bit more research, see what's going on. Never heard of that entity before. I probably have, but as far as knowledge of what's going on, that's I want to stay informed. So I did pull that up on this monitor.
Good. All right, cool. All righty. All right. So if I just did that right, do credit scores matter? Well, so this is one I like to show. This one is that the guys' credit scores, guys or girls, are 624, 633, and 627. That fits in that slot between 620 and 639. That's a low edge for it's a probably you can get a decent FHA rate. But this is what's crazy about this is the guy on this potential score improvement has 107 points for his Experian, 89 points for TransUnion, and 87 points for Equifax. Now, what kind of potential? How does he get that potential? I think I've shared this before. Do you remember what I have talked about on this before?
Yeah, pay down credit, add a line of credit, or share credit, add a line of credit.
This specifically is talking about credit card debt, revolving debt, that his balances are too high compared to his limit.
Yep.
So what usually happens is somebody gets a group of credit cards and they max them out, or they get within, well, truth is anything over 50-60% is going to give you this kind of potential. And what the potential says is pay down your debt to this number. Well, it's probably not a day goes by that I don't do one of the things that we do, which is a document called a Wayfinder. And if I need to get a specific credit score, I go to the Wayfinder and it'll say, pay this one down to this number, pay this one down to this number, pay this one down to this number. And I have 3 accounts. I've got to get paid down to a specific number. If I do that, the credit score will go up the prescribed amount. I mean, it's rare. Excuse me. It's rare when it's off. It's usually very precise. And if you pay it down to whatever that number is, you get the affected points. And so that is something that when you can manipulate your score and the benefit comes in lower interest rate, or even better, and I don't know, I haven't talked to you about this at all, but I consider a conventional loan most of the time is going to be better than the FHA loan. And the reason for that is the way that the mortgage insurance is treated. Okay. FHA has lower rates, but they have an upfront premium and they have a monthly premium that stays there for the rest of the loan term. Long term, that's not a good play. There are times when you go into an FHA loan and you get out of it when you can. That's a good play. But the difference in money, and I've got these numbers, 144 difference in payment monthly, $1,728 annually. By changing programs or just increasing your credit score, that does a couple things. One, obviously the extra money's fine, but it also gives you the ability to buy more house if you get a lower score, because lower scores give you a lower payment. Lower payment gives you a higher debt ratio. So there's a lot of cool things about that, and I can't. Well, being the credit score guru that I claim to be, I'm supposed to know about that kind of stuff, right? But I preach it just because a lot of people don't know about it, and so I like.
They don't. You'd be surprised they don't.
Yeah. So and so anyway, we talk about it, and I'm going to talk about it every time. All right. First-time home buyers make up nearly half of the new market, or this market, and I think that I was pleased about this. I'm wondering if I didn't skip a part. I thought I had those in order. Anyway, this is Zillow shares of first-time home buyers are back. Home prices declining could be the signal they were looking for. And it's not like home prices, again, are declining. It's that there's reality going into the home pricing right now. And I think this is valid. And this I like this. This is where I call it a making a little bit of sense, is current higher rates are keeping existing home buyers or homeowners, they're staying put. So what's dominating right now, the reason that the first-time home buyers are coming out there is because they don't have a home that they're paying a low rate on, right? So let's just see what this one says. It says they represent 45% of the market. That's up from 37% last year. First-time home buyers have returned to the housing market, and those who can afford a home are finding success. In fact, the share of buyers purchasing a home for the first time has rebounded to pre-pandemic levels, now representing 45% of all buyers. And that's up from 37%, which I said. So Zillow says share of first-time home buyers plummeted during the pandemic as first-time home shoppers lost out to older, I don't know about older, repeat buyers who were able to tap in their equity or existing homes and use cash to make a stronger offer. Zillow survey found in June, younger buyers were more likely to report losing to an all-cash buyer at least once, as was the case of 45% of Gen Zs and 38% of millennials. See, I'm not sure that it was cash buyers were people that owned houses. I'm not sure how many people have paid off their house, but I do know that there are a lot of cash buyers out there, whether they're investors or what. And obviously, if you can pay cash for a house, that's a very positive place to be. Not always, but most, I mean, anyway, good article. Good news, I think, for first-time home buyers. The home prices are coming down from maybe what they were at. And good sign is hopefully rates will stay where they're going to be for the time being anyway. We'll see what happens with that. I just don't know. I wish I did.
Yeah, there's plenty of opportunity out there. That's what I've been telling the buyers that I've been working with. Don't just shop at the price that you know that you have the pre-qual to. Let's shop a little bit higher, especially for those houses that have been sitting for 30, 45 days. There may be an opportunity there.
Oh, I guarantee you, people get nervous after a week if they don't have a home.
Yeah.
So see that all the time. All right, so foreclosure activity up. This is what I was worried about. U.S. foreclosure activity continues to increase by the quarter. Now, the key part about this is that they're up because the government did not allow lenders to foreclose on properties. Okay, so they're going to be up regardless. But we have specific numbers: 92,634 properties in foreclosure as of August of this year. New York and Chicago lead, with LA in third place as far as cities. States leading are Illinois, Delaware, New Jersey, South Carolina, and Ohio. Didn't see any of the Sunbelt states on that list. I think that's good. I think that people are moving from states like Illinois, Delaware, New Jersey, South Carolina, and Ohio to get to where the economy is a little more stable and the home prices and pretty much all costs are less than they are up there. So
And it's warmer.
and it's warmer. Amen to that. And it doesn't rain as much. Of course, it hadn't rained much at all lately.
Oh my God. There was some rain falling from the sky the other night. I asked my wife, "What's that?"
What is that?
It's been a while.
I know it's been a while since we had seen some rain, and thank goodness we get it. Hopefully, we'll get a little more as the week goes on too.
Yeah.
But I love the temperatures today, man. It was nice out this morning.
Can't beat that for sure.
Well, check it out. I couldn't wait to get my vest out. You know, my thing here. I love it.
Sweater weather.
That's all right.
Yeah.
All right. Today's mortgage rates, man. I don't
Tell
like.
Tell me some good news, Mike.
But I am offering today and did offer today on a quote 6.99 on a conventional loan. On a 15-year, I looked it up, they were 6 1/4. So this is actually consistent with what we had last week. So there hadn't been any movement from my, might have been different investors and stuff, but I could still offer 6.99 today on a 30-year fixed rate with a credit score that's over 740. I don't have that many calls for 15-year right now. There are still people out there that are doing the 2-1 buy down and just a regular buy down. And we talked about that, I think, in one session about using the money that you might use for closing costs to buy down your rate. That I still think that's a very attractive way to use that money if you have the money to close. So that's something that's out there, and we can look and see which one's the best way. I have some software that allow me to put different scenarios side by side, and it weighs out not only the effect of that strategy in what they consider a short-term 5 years or up to 15 years. Matter of fact, that's what we did with the person you and I worked with just recently, is we looked at a 5 and 15-year progression of what the payments would be, and he chose wisely, I think. So let's see, and that could be it. That is it, Joe. I think we went through 27 minutes, and anyway, I guess that is the end of our broadcast today. I do want to thank you for being on, Joe. Always good to have you here. And thank you for anybody that's watching. Listen, if you subscribe or click or put the like button or anything like that, we'd love to see that. If you have any questions, obviously, for Joe, you can reach him at 346-224-4224. And you can call me at 281-348-9899. And man, we just appreciate you and thank you for all the comments we've received. And we'll see you next week, same time, same station. All right. And then am I supposed to turn the music on? Well, there it goes.
Thanks, Mike. We'll see you next week.
All right. Thanks, Joe.
Thanks for listening to Better Credit, Better Home. Be sure to hit the like button and subscribe so you don't miss an episode. If you're looking for a great mortgage professional, reach out to Mike at KingwoodMortgageGuys.com. Or if you're looking for a home inspector or awesome realtor, reach out to Joe Salas with Byrd Properties International.